Good Monday morning. My name is Richardson. I am the compliance broker for Maximum One Realtor and Realty Partner.
I'm Alan Richardson, I'm the managing broker here. And so we appreciate you joining us. Every Monday, we do our real estate backstory, kind of go over the comings and goings. And even though our offices are closed officially today, I mean, not that you're ever officially closed in real estate, but I know that, the offices won't necessarily be open, but, there's still a lot of things happening in real estate. So we just kind of wanted to share with you guys still what's going on, what we're going to do, that kind of stuff. So we kind of want to jump right in here. And we want to talk
about the interest rate.
Well, we will get the interest rates. First, we got to talk about what's happening with sales. And so, we have seen where, and if you watch the news right now, everyone is losing their ever-loving minds right now, right? Pending home sales are dropping, and they have been dropping. Okay, we're on our 6th consecutive month on pending sales. Now, here's what you got to understand: we're talking about numbers of sales, not dollars. And so we're not looking at property values dropping, even though I do think the property values will be flattening. At the end of the supply versus demand is going to move into, will end up affecting pricing, but it's not going to go into a negative. It really is going to have a really hard time. You'll see that right now, new home sales is down about 16% month over month and about almost 30% year over year. And pending home sales is down about 4% versus almost 9%. And we've kind of been talking about that. Right now, pending home sales is down about 9.5%. We've been telling you guys, please be ready, because that the number of sales is probably going to go down by about 10% this year. I think that's a very realistic figure of what we're looking at. And largely because of the rise of interest rates, we still are having a lot of inventory issues, and that's getting a little bit better. We'll share some of those numbers with you here.
Absolutely.
And so,
so once again, we're talking about units, not necessarily dollar amount of descending sale. Okay.
And so, what you were talking about, Ming, like we've actually for 2 weeks now
seeing a rate drop.
Yeah, the rate has dropped. So we were at 5.3, and then we're at 5.2 something, and now we're at 5.1.
And I think a lot of lender is seeing the impact of it. And once again, Alan mentioned before that they actually push up the cushion when the bank that they borrow money from, the lenders, weren't extending their interest rate as high as
they went up higher than the federal funds rate and that kind of stuff.
So now they're seeing the impact of their uptick raise of the interest rate, and therefore it's affecting loans.
But now, what about the number of loans? How about the number of folks who are trying to apply for loans? You can kind of see, so on this graph, you're going to see two lines. You're going to see the black line and the blue line. The black line, that's refinances. And you can see what refinances are. Refinances are basically at its lowest level ever. Right. It is really, really down. But if you look at the blue line and this is over the last 10 years, and that is the mortgage demand. This is how many folks are out there. Now, are we seeing a drop over the last year? We are. And I think we'd be silly not to acknowledge that. But if you look at historically where we fall in, we're not in bad shape. Well, it's not like no one's looking for houses. So we know that there's a market correction, a market shift. It doesn't mean that we're seeing property values drop. It doesn't mean that we don't have any buyers in the market. If anything,
we still have pent-up demands. Yeah. But the problem is right now with the interest rate the way it is pushing those buyers that actually was looking at a $400,000 home in prior December, now is only able to afford a $300,000 home.
And a lot of that's coming down to wants versus reality kind
Correct.
of thing. A lot of folks, especially there's a lot of buyers that were lamenting in December, like Ming was saying, with gosh, property value is going to drop and that kind of stuff, and so they waited, and now
they assume the interest rate will remain the same, but it has not. It's gone up about 2 points.
And so with us saying, look, now's the right time, all the folks who were at the time, we'd be saying, look, now is the right time to buy, and folks would be like, well, property value is going to drop, blah 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 blah, and now all of a sudden they're like, man, I sure wish I had bought then. it's still a really good time to buy.
And the reason why the refi is all-time low is because of those folks that have higher interest rate. They are refi back into when the rate was threes. It was awesome.
So now the Fed is going to be coming out, and the Fed is pointing to more half-point rate hikes in the future. When you see this, I don't want you to kind of get tied up with the fact that this is tied to the mortgage rate, because it's not. The mortgage rate works along with the 10-year treasury. So as the 10-year treasury goes, that's where we're going to see interest rates go. And so anytime that there's market volatility and fluctuations, folks will move their money out of the stock market and into treasuries, which will make the values go up. And that's kind of what we're seeing right now, because obviously the markets is a pretty scary place to be in right now.
It's a roller coaster right now.
Yeah, but you should expect to see the Fed is trying to be aggressively, they want to get us up to a flat rate right now, which is somewhere around 3%. And so we're they've jumped up a half point. Expect several half point jumps, but when that happens, don't think that interest rates are jumping a half point. For mortgages, it's not the same kind of thing.
Correct.
Now, a little bit of good news here for us. So the inflation rate actually, I know it sounds strange, but from March to April dropped. Overall inflation dropped from a 6.6 to a 6.3, and core inflation dropped from a 5.2 to a 4.9. Now, this is nowhere near the 2% mark where we really want to be. But seeing that some of the inflation is starting to move and it's starting to trend
a little bit.
Yeah. So it'll be interesting to see where May's numbers come in and that kind of stuff. But that's still a really good sign. Now, here's one sign that we are really seeing. And, Redfin released some information that we thought was very, very timely kind of thing. 1 in 5 sellers are dropping their price. We have the highest rate of price reductions in three years. Right now, kind of thing.
Pre-COVID time.
And so we are seeing some demand that is stymied by the inflation rates. There's just no doubt about that going on there. Just even the Google searches are down right now, 13% from last year. All the home buyer, the Realtor's home buying index, Renfit, all that kind of stuff. Property tours are down, so we are seeing less demand. Now, that being said, we're seeing less demand in different price points. If you are still under 300,000 in the Atlanta area, you are not seeing less demand. No. Okay, that's going to continue to be our really hot place to be. Is anything basically under 300, especially 250. Those are kind of, and so we're starting to see more supply on the higher end side of things. So this is where we sit right now with our median sales price. And so as a nation, we're still running 16% property value increases over last year. I expect to start seeing this number tapering off as we get into fall. Yeah. When that happens, don't run around like your head's on fire. Okay. That's exactly what we expect to see happen. And it shouldn't come as a big surprise. And you shouldn't be like running around like, oh no, the sky is falling kind of thing. That's not what we're talking about.
Because at the end of the day, everybody needs a location to live, whether it's rent or purchase.
Yeah, and renting is definitely not a place to be.
Right now, yeah, it's pretty bad.
So, but when you look at why are we seeing the reduction in demand? Well, this is why. Look at what's happened to the mortgage payments just in the last, in the first 6 months of this year, or 5 months of this year, rather. We're almost at 6 months. My goodness, this year flying by. But, this is why, this is where that big, what's holding back demand right now. But that's also where we're starting to see some breakdowns in pricing as to where demand is based on the different price points.
And you will see some of the new construction now probably getting ready to offer some incentives because
we're going to go over that in just a second.
Yeah. So it's a good thing. So once again, be nice, be nice, be nice.
Yeah. Now, pending sales, and this is what we talked about earlier. Pending sales is down 5.5% year over year. And so you can see where our pending sales are trending down. We've known that. Now, at the same time, active listings for homes are still down. All right. So this is what I was talking about. Even though we're seeing that the demand is maybe not where it was, look where their active listings are. I mean, this is active listing. I mean, we are still at 50%. In some places, 60% or 40% of where the inventory level was just 2 or 3 years ago.
Right.
So the total number of listings we have is drastically low. Well, and so are we going to start seeing property sitting on the market a little bit longer? Yes. Are we going to start seeing less competition on homes? Yes. But does that mean that the market is suddenly reversing itself? No. And so this is one of the numbers that everybody's talking about. So 5% of our listings have price drops, and you can see what a drastic change that we've had in the number of properties that had price reductions recently. Okay, the sellers that are on the market that came out with really like, hey, we're going to try and hit this.
Came out with a very high.
They came out very aggressive, and it's kind of bitten them on the rear end, because when you come out and you're overpriced, now is not the time to be overpriced on our market. It just isn't. Right. So you can see that this is kind of like the overall pricing and price drops, the number of properties that take a price reduction, for the last 7 or 8 years here, kind of thing. And so you can see that right now, it hasn't been this low since 2020 or 2019. Right. But this is a really normal trend. You can see that this happens every single year. So this is not completely abnormal. There's not like we never see this kind of thing. A lot of times this happens, going into the summer markets anyway. So on average, we find, historically, about 30% of properties take a price reduction. Mm-hmm. A third, almost a third, and it's less than a third. It's right at 30% of properties take a reduction. So the fact that 5% are taking a reduction, yes, it's higher than it has been.
But it's nowhere near average. No,
it's
not. It's actually below average.
Exactly, spot on. So we can still see that the average home sold for 102.8, 103% of list price. So are we looking at this massive market correction? We're looking at a very gradual market correction right now. That's what we're really looking at. So I do expect to see this. You can kind of see that and it has started to drop. I do expect to see that number continue to drop. And we'll start getting under 100% of list price here soon at some point, which will be nice.
I think that's going to happen in fall, just so you know.
It will. I agree with you. I think you're spot on with that. So this is where our inventory is coming in, and you'll see people talking about the amount of inventory that's coming on the market and how that this is the sign that the market is just kind of, oh my gosh, it's made this big flip. So yes, you can see that right now. The light pink areas, these are sales that were immediate sales compared to the total number of listings. Now you can, when you look on the far right hand side, you can say, gosh, that seems like a pretty drastic jump in there, and we're not hitting our. Well, look where we were at May of last year. Okay, yes, we're actually seeing more listings, but the number of listings that went in immediate sales is very, very similar kind of thing. And so you can see where these numbers are seasonal. Mm-hmm. Normal, right? So you can't just read into May's numbers and be like, see, there it is, right? This is, are we going to start seeing those numbers taper down as we get out of summer? Yeah, that's going to be natural anyway, and everyone will lose their mind about that. So one thing that we are seeing right now is we do have some sellers trying to jump into the market before it slows down, and we do agree that we're seeing some folks out there doing that. What I'm going to encourage you to advise your sellers is if you want to get in the market while it's still now is a really good time to sell. Don't get me wrong, it's a really good time to sell. Don't be crazy with your prices.
Correct.
An overpriced home is not going to do good in this market. It just isn't.
Not only that, you have a limited buyer that's able to view your property, and you really knocked out some really good qualified buyer that could potentially given you more had you not been so crazy with your price.
Yeah. So we got to be realistic about, these are where the comps are. This is what a buyer's willing to pay for this home in this area kind of thing. And let your numbers do the talking for you.
Do the research, because just because your neighborhood sell at a certain point does not mean yours will, depending on the interior and upkeep and maintenance of your property. So if your property is inferior, then the one that just sold for higher price and bigger square footage, don't expect the same thing for yours.
Because the buyers are knowing that the buyers know that more inventory is coming on the market. and they're starting already to get a lot choosier on there because they're paying more. They want to make sure that they're getting the most for their value.
Absolutely.
Now,
yeah. And they just want to be, they feel like they don't want to be upside down a house, and they won't for a little while. I don't believe, and it just depends on what the market's doing down the road.
Well, and speaking of which, the reason I wanted to share this with you, this is from Altos research kind of thing. And so this is where our standing inventory of homes in the United States have been for the last 7 years. And you can see that 7 years ago, we had 1,200,000 homes on the market. And right now,
standing inventory,
we have around 350,000 homes on the market. So if you look at where we've come just on the total number of listings and total number of properties for sale, you're a math whiz. So
it's
it's
about a third.
Yeah, it's about, so we're at a third of the standing inventory where we were 7 years ago. Even look back to where, we're less than half of standing inventory where it was in January 2020, pre-pandemic kind of thing. So just the number of homes, yes, we may have a little bit less buyers, but we got a lot less inventory kind of thing. So will this cause our market to start leveling off some? Absolutely. We need to be ready for that, and we need to be explaining that to our sellers as well as to our buyers.
And honestly, a lot of buyers truly has been knocked out of buying just because the interest rate.
Well, but the good news is that as the market is slowing, when I say slowing, it's the number of buyers, that's going to open up some opportunities for our buyers. It is, and so we need to be understanding that, like on all things with real estate. If you are a listing agent and you see the number of transactions going up, that's a really good thing for you. If you're a buyer's agent, you see the number of transactions going up, that may not be so good. It all depends on which side of the coin you choose to look at this. So, yes, we are going to be seeing the number of transactions, not as many, but if you're a buyer, is that kind of good news for you? If you work with a lot of buyers, does that mean that inventory is going to be opening up and also going to be creating more opportunities? It is. Right now, a lot of our buyers have really been lamenting about. I need to turn that off. But for the past several years, a lot of our buyers and buyers agents, there's not enough inventory. But if you remember back to think back 2007, 2008, when there was so much inventory. Do you know that we looked at 3 times as many homes then? The average buyer looked at 3 times as many homes then as they do now. So, you got to be ready for that kind of thing. So as the inventory increases, look, you're going to be showing more. If you're a buyer's agent, you're going to be showing more houses just because there is more inventory, more things to look at. People don't want to, the FOMO is a real thing, fear of missing out. But no matter what's going on with the market, understand that property values are not going to go down. Sorry, something in my eye other than my finger. I wanted to share with you, this is how much home equity that you've gained if you lived in the Atlanta area. And so, your 5-year equity growth is around $182,000. Your 10-year, $279,000. 15-year equity goes back down a little bit. That's because we had a 2008 correction in there. And so if you look all the way up at the 30-year equity, your 30-year equity gain is around $342,000 for our buyers. Either they get into this game because wealth in the United States is tied to
home ownership.
And you can see exactly what's going on. Now, we're not going to see property value appreciations to the extent that we've seen over the last 3 years. That's not realistic. But overall, year over year, 3 to 5% is what property values run. And so, we need to be protecting our buyers and understanding that for our communities, their wealth is going to be tied up in home ownership. So we need to help people buy homes.
Absolutely. All day.
Let's jump into new construction real quick. So this is our inventory of newly constructed homes in the U.S. Guess what? It is jumping up.
So wow. And honestly, new construction has been holding off a little bit because probably about a year ago when they were pre-selling and now selling, actually closing this year, what they find is that the cost of new construction has gone up tremendously, and they either have to raise the price on the buyer, which a lot of buyers are just raising Cain, and rightfully so. And so now they're actually waiting until the sheetrock is up before they even allow that property to be listed.
But
Therefore, will
even
count
with
for
that, though,
more true actual cost versus a projected
yeah.
cost.
But all
So
that being said, though, we still have the inventory level of new construction is up and up significantly. At the same time,
well, I think partial is because they held off to put on market because that's the issue I just talked about.
that there's some of that, but like when you look at what's happened to the pricing that they had, where they're standing. When I talk about, and we're just talking average new construction, the average new construction home in Georgia is right at $408,000 now. That's our median price point of new construction. And so you can see the inventory levels jumping up. Sales actually are dropping. The number of sales is down, and down pretty significantly for new construction homes. And I think that this is highly attributable to our builders have been in the same build box for the last 10 years. We spent probably the last 7 or 8 years building on existing inventory, building on existing lots. And so they've been developing more and more lots, but they haven't changed the structure. They haven't changed anything about the house. They've been building the exact same houses. They haven't been building. They've been building.
Alan, I call it box built.
Well, but very few entry level products kind of thing. They've been using the exact same floor plan for 10, 15 years. And like right now, our millennials is our largest buying segment. And most of our millennials are not shopping at $408,000. So they're building themselves out of their markets out there. And so now some of the builders are starting to see it. And so you should see it too out there. And that is townhome construction is increasing. It's increasing big right now. Just starts in the first quarter are 16% up. Here in Henry County, we've got about 6 different townhome communities. And as realtors, we need to understand that townhomes does not mean cheap housing. It does not mean bad people, anything like that. Understand this is a product that the builders can afford to build, and that our first time buyers can afford to buy, kind of thing. And so this is a really, and plus a lot of our younger buyers, they want to be more centrally located. They don't want to have to deal with grass and with maintenance and all this other kind of stuff.
And honestly, the townhome they're building now, are majority for the one that are successful are gated. And not only that, guess what? They now have a garage that they can park in versus
we're seeing that. That's a pretty really popular.
So that trend is a safety issue for a lot of young millennials, and so therefore, parking is a consideration.
One thing that we need to be reaching out to our clients is that there's a new study out that a lot of homeowners are now underinsured. If you think about, for a lot of homeowners, like look at what's happened with the building market out there and the cost of materials. How much would it cost the average homeowner to rebuild their house right now? And then when you look at what's happened with property values, so you look how much more their house is worth now than what it was before. And I don't think anybody wants to go out. Homeowner insurance premiums have been going up pretty significantly across the United States. But that being said, the last thing you want to do is find out that you can't afford to rebuild your house if a disaster happens. You don't ever have to insure the land. I understand that, but you do have to be ready to rebuild that house again. And there's so many folks that have just kind of been sitting pretty. For us, we had to go back and relook at what was going on.
Yeah, because we bought our house 20 years ago. That's like maybe $200,000. Today, you can't get that.
So we couldn't afford to rebuild what we had.
No, we can't.
And so we're not the only ones in there.
So you need to adjust your your insurance.
Yep. One last thing that we just kind of wrap up with here, kind of thing, and that just because it's off the market doesn't mean it's off the internet. We've been getting a rash of especially buyers that still find their home on the internet, and they find their home along with photos and how things look and the interior of the property, even though most of the time it's not their furniture. We need to explain to folks that, listen, that those photos belong to the listing agent. Most of the time the buyers, like you buy a property and you figure that you could call the buyer and say, hey, I want these pictures off the internet. Doesn't work that
Doesn't
way.
work like that.
And so we need to be able to explain that to folks that's not how that's going
Yeah,
how that's
because
going to work.
once again, the photo belongs to the listing agent, not the new buyer, even though
Yeah.
they're now the homeowner. And they get upset once in a while. They'll say, well, they're showing a layout of my house and furniture. I said, well, it wasn't your furniture, so it's not really applicable. And granted, you may have nicer furniture than previous owners. I get that, but the point is that photo does not display your current home, and it's not your property or
So
intellectual property.
and so we can go out and request that the listing agent removes those photos out of there. But even then, you still have to leave the one main photo on there. Sometimes some of the aggregators will pull that data down, others won't. And
Right.
so just, it's one of those things that's kind of like, if you do something stupid, it's going to be on the internet. Well, guess what? Those listing photos stay out there for a long time too. We just need to explain that to folks.
You will have to go directly to that source and request them to take those photos down.
Yep.
So it's more than just, call the agent and harass them, because not going to work.
Now we have a continuing education class this week coming up Thursday, which is like the most timely topic that I can possibly think of. So DS Murphy, the appraiser DS Murphy, they're going to be coming out and they're going to be doing understanding values in this crazy market. And so I think this is a incredibly timely topic. We see a lot, everyone's wondering what's going on with values. So please, I encourage you to come out on Thursday. It's our Conyers office at 9:30 kind of thing. So I encourage you to come out to that, because we all need to know about values.
And Nancy will love to see you.
So thank you guys very much. Hope you have a great week. If you need anything, call, text, smoke signals.
And remember, honor the heroes.
Yes.
All right. Take care.
Bye.